But it almost doesn't matter. Whatever blows up first is going to be the powder keg that starts it around the world.
I love you. You're just leaning me through this. So we already talked about the American basket case and the European basket case. Let's jump over to China.
Yeah.
Hey everybody, Economic Ninja here. I am at the Silver Symposium with Rob Kientz of GoldSilverPros.com.
.com.
So I always mess these things up. We got to laugh right now because we've had a really long couple days.
Yes.
But yet you found time to go running in the morning.
I did. We hit the trail this morning behind the hotel. It's great.
I'm like running around like a chicken with my head cut off, and he's all, I'm going for a jog, don't worry. Geez, though, must be nice. But it's cool, you're a multitasker.
Yes.
So we've had a lot of stuff going on. Mm-hmm. I love your channel. I said it earlier today. I think your information is so well put together, so well thought out. You put out a ton of information. And I know how hard that is because I do the opposite. I just go stand in a field with a coffee and I just ramble on, But it's a very important thing what you do. So right now, I mean, obviously we've seen in the last couple of years an absolute, in my opinion, horror story when it comes to economics, right? But that horror story hasn't played fully out yet. We've seen businesses get destroyed by being forced closure. Never seen that. We're seeing almost about $1 trillion a month being printed right now, right? We haven't seen the repercussions of that. We're seeing an unemployment story that literally in the next 90 days could paint a horrific picture of people having to make a decision one way or the other if they're going to leave their job or get fired because of their belief system.
Yes.
What do you think is the most important takeaway right now, because I don't think a lot of people understand what's going on or feel what's going on?
I think the way that the conventional news media reports this is they don't dive into the details like you and I do.
Yeah.
I think you have a good intuitive sense about what's going on, whereas you may not feel that you provide a lot of data. I think you see the big picture and you're able to relate to people and say, hey, here's the issues we're having with unemployment. Here's the issues we're having with shipping.
Yeah.
Here's the issues we're having with invoicing that you were talking about yesterday at the conference. And you're very good at picking out those signs. Kind of what I do is I dive into the data and I'm like, what's going on behind the scenes? What's behind the matrix?
So what are you seeing behind the matrix?
So behind the matrix, what I'm seeing is I'm seeing incredible issues with the supply chain, and it's not just the revamp after the COVID pandemic.
Yeah.
Because we've surpassed, the demand for supplies. We've surpassed inflation.
Yeah.
So we're in an era in which we can't supply what we need, and that's going to affect the quality of life of so many people.
Yeah.
And it's causing mass inflation, and most people aren't protected. Most people are sitting in these bubble assets like stocks, real estate, bonds, that are traditionally, you've talked about being the pillars of an investment portfolio.
Totally.
But they're not in gold and silver. They're not in or farmland or other safer, assets.
Shoot, they're not even in toilet paper right now. I mean, it sounds funny, but there's people that used to make fun of us when we go down to Costco and buy a couple extra things of toilet paper, like, you're nuts, you're a hoarder. And now we're seeing that the packages shrinking, the prices going up.
Shrinkflation.
Yes, even if you could even find it, the shelves are starting to go bare.
Wall Street Silver does a good job of covering shrinkflation. They do. They do tweets every day. Yeah, what we're buying is smaller at the same price or more. And that's Sally Homemaker's starting to see it. You see some awareness at this conference, especially the younger generation of people driving up from Texas. I met 3 people from Texas where I'm at, and they're all in their 20s, and they're all like, I need to do something.
Isn't that awesome?
Yeah, it is.
It gives you real hope for humanity. You're like, you guys are waking up. This is so exciting. Yeah. So with that being said, we've got 80 ships sitting off the docks of Long Beach right now. At a certain point, those ships will get delivered, and everything's going to hit the shelves.
Sure.
It's almost like we're going to have a ton of inventory of possibly just a bunch of crap laying around.
Yeah.
What do you think is going to happen when all of a sudden there's more stuff than people want?
Well, when you dump too much stuff on there, of course, value of goods fall. But I'm not convinced right now that those 80 container ships is going to be enough to relieve supply gluts and critical and critical needs.
Do you have an example of something that's critical right now that's needed that there might not be enough of on those ships?
Silver.
Okay.
I think rare earths, critical minerals that we need to build our economy with, certain metals.
I wouldn't have even thought about those being on those containers.
Tin and ore, because while the United States produces a lot of our own gas, we lack critical rare earth minerals that get shipped over to support our military and our technology.
You're right.
So we can get gold and silver, we can get oil and gas, some of these other things we can't. Tin, lead, copper, zinc, all these things have to be shipped around the world. And you're seeing this massive increase in prices in copper, lead, zinc, the basic building blocks of our economy, and that's affecting producer prices, which is going to affect inflation. And 80 cargo ships is not enough to supply our economy. And I mean, it's going to be helpful.
Yeah, I'm not even wanting to make light of this. I'm literally thinking of PlayStations and Xboxes on there because they're in shortage. I'm not even joking. I didn't even think about that being on those ships.
Yeah.
That's absolutely crazy.
Yeah, all of that stuff comes over one way or another via shipping, because the United States, if you look at the Western Hemisphere, a lot of it doesn't, a lot of supplies come from South America, but not everything. A lot of it comes from China. A lot of it's produced in China. A lot of it's produced in European Union. Our biggest trading partners are China and the European Union, Germany. So it gets shipped over.
So this is a great segue. Let's jump into the European Union. We're seeing an absolute energy crisis right now.
Yes.
I put out a video a little while ago about starting to not allow your fuel tank to go under half full because you never know. And now we're seeing those massive lines. Nat gas was up right now 12% today alone in Europe. So I'm of the belief that we're going to see a crisis in Europe, and then that will the contagion will run to us pretty quickly. Now, I'm not saying it's going to happen soon, but I think we're so close.
Yeah.
Can you add something to that? I mean, when people start spending a lot of money on natural gas, fuel, and things like that, they have less money to spend into the real economy.
Crowds out your discretionary income.
Yeah.
And there's issues with energy there, energy inflation, and this is something I wrote about 7 or 8 years ago on Seeking Alpha. The first one to break is probably going to be the European Union. Yes. They were the first to negative interest rates, so they were first to debase their currency even more. They have issues between the northern and southern countries, and policies. Look at what happened to Greece and the bailouts and the bail-ins. So their politicians are more apt to screw the average Joe to continue their social programs and spending and to bail out countries like Greece. Than what you see in the U.S. So I think Europe will probably blow up first. I think you're correct.
Greece and Cyprus were a great petri dish for what is coming, because you're right. It's one thing to have a bunch of states in the United States and work on monetary policy, because we actually have the covering of the government and the Federal Reserve, right? They're the ones that really make the policies. Well, that's really the Federal Reserve. But in Europe, you have this European zone that is multiple countries, totally different politics. So they're much slower to move. We saw when Italy was completely collapsing a few years back, we saw they would, like you said, sell out the average Joe to get their policies pushed through. They could be the basket case that tips this one.
They could be. That could be the Black Swan. We often talk about Deutsche Bank or the banking system. It could be that some of these economies start to collapse and the banking system that supported them starts to collapse, because if you don't have that money coming in, how do you pay off your loans and things? And again, they were the first to negative interest rates on a grand scale, something like $15 trillion or whatever it was. Huge numbers. And people aren't talking about Europe as much right now. They're focusing a lot on China and the U.S., but I think Europe is a big risk. But it almost doesn't matter. Whatever blows up first, it's going to be the powder keg that starts it around the world.
I love you. You're just leaning me through this. So we already talked about the American basket case and the European basket case. Let's jump over to China. And I don't want to put you on the spot, because I've been covering Evergrande for a little while, but I've been covering commercial mortgage-backed securities for a little while on the channel. How do you see this playing out? Because this is a really interesting story, because technically the Communist Party of China could say something like, you know what, we don't want you to liquidate your Chinese real estate. We'd rather you liquidate real estate that's held outside of the country to try and helpfully hold our situation together. What do you think about that?
I think it's helpful to talk about the scale. It is the second largest financial institution, the second largest economy in the world, and it's the largest, high risk or junk debt shop in China. And $300 billion in risk, which doesn't sound like a lot, but it starts small and it reverberates. HSBC, all these other global banks have exposure. BlackRock has exposure to this. So it's not just going to affect the Chinese economy. And what China is talking about doing, and what Evergrande is talking about doing, is just bailing out onshore, i.e. China, investors, and letting the rest of the world basically, spit in the wind.
And that's actually already happening. We're already seeing bondholders not being paid their interest as of like a week ago.
So they're gonna go kind of xenophobic in a way and protect their own. And so I think that means the Chinese state doesn't have to necessarily do as much and let that contagion spread outside Chinese borders. And I think that's probably the route it's going to go. And you're probably going to see some additional monies printed, some additional stimulus in other areas, dependent upon, you may see a BlackRock or somebody go to the U.S. government and say, bail us out, or help us make that debt whole.
You ever watch the Hodge twins?
I have not.
You haven't? Oh gosh, they're amazing. So they love to name things, right? And they go, we can't even put China in front of something. So I don't know if we're going to be able to even say this is the China crash. Because it's going to be the blame game.
That's right,
I mean, because literally, like you said, we're all basket cases. So it's like, it's the Chinese crash. And they go, and you can't say that, right? Because really, it's going to be the finger pointing that goes all over the place.
It is, but what we're seeing are the early stages of the next collapse. Like you were talking about on stage yesterday when you saw real estate, was it 2005, 2006?
Yep.
You saw the early signs. I think we're starting to see it very early signs of a worldwide contagion, not just a Lehman contagion in the U.S.
Oh man, and think about this. Back then, the average, Fed funds rate was around 4.5%. I want to say when everything started to hit the fan. So they had all these bullets in the magazine.
Right now
they're going.
No bullets.
Yeah, it's like there's not even a magazine. I don't even have anything to put a bullet in.
Yeah.
So they're doing a narrative right now. So here's my fake bullet. I'm going to pick up my fake magazine. I'm going, the economy's so good, we're going to raise interest rates maybe next year.
Yeah.
There's one imaginary bullet. And then the second imaginary bullet, you know what? We're going to taper. This economy's so strong.
Yeah.
But then what's the next thing? It makes the markets feel good, and then the markets start to feel bad again. They say, okay, we're going to shoot that imaginary bullet. I know you didn't hear anything, but we're not going to taper. And it's just this cat and mouse game until it just goes.
I do think people have asked me whether the Fed's going to taper or raise interest rates. I do think with Powell at the helm, philosophically, he's going to want to try, much like he tried in quarter 4 2018, and it backfired 20% correction. So I do think that they're going to want to try to do that, but I think it's going to fail miserably.
Man, I'm so glad you brought up Q4 2018, because actually they were raising rates incremental. I got the word wrong, but little by little for a couple of years. They started, I believe, in late 2015. And what people don't realize is that we got the Fed funds rate to, I want to say 2.25%, 2.5%, if my memory serves me, and the economy could not handle it.
No.
And that was the shortest period in Federal Reserve interest rate history where they went from a raising standpoint, went over one quarter and went straight to a lowering cycle. And that was enough to juice the markets again. But I don't think people have the respect for that first turn down in the stock market. I think the Dow Jones lost 19% from October 6th to Christmas Eve of 2018. That was 2% larger than the first down leg of the Great Depression.
And it was the fastest. It was the fastest fall, even faster than the Great Depression when it fell. It literally went like a rock.
Yeah, and so everyone should have said right there, oh my gosh, we're sick. The economy is on life support.
Yes.
Now we're at negative, we're at 0%, but sorry, with fees everybody can argue we're pretty much negative, right? I mean, a lot of people are losing tons of money to inflation, which means if we have a hiccup, what does the Fed have in it? And we're going to do this, we're going to end on this question. If we have a hiccup, what can the Fed do?
Nothing in real terms. They'll talk about negative real interest rate policy, but the U.S. culture, the U.S. banking system, the U.S. psyche, the history of Americans is that we don't do negative interest rates.
Exactly.
We are not going to accept negative interest rates because we're a capitalistic nation, we're a producing nation, unlike Europe. We're not going to do it. And so if they start to go negative interest rates, you're going to see a flight from federal debt, which the Fed is going to monetize every dollar of debt that comes out from the Treasury.
Yeah.
But we already have $180 billion in negative yielding corporate debt in the U.S.
Yep.
A lot of people don't know that. That will blow the hell up as well. And if the corporates go down, then we're in serious trouble.
Yeah, and when you're talking about a flight, I think let's put this in, close this off with precious metals as a narrative. What happened in January 31st and February 1st this last year was amazing because when all of a sudden that the Wall Street bets numbers or the names, the AMCs and all them were being put up there, and all of a sudden silver showed up.
Yeah.
Something happened, and it happened almost overnight. We saw supply for investable bullion disappear. And we saw the VIG explode. Do you think you're going to see that again?
We'll see it again because I've said this will happen in waves. The first wave was an awakening that has occurred over the last 10 to 12 years. And people like David Morgan and Chris Marcus and you and me talking about this.
Yeah.
The second wave was that Wall Street silver boom where it was like a sonic boom.
Yep.
You saw a much quicker reaction to that.
Yeah.
But what we counsel people was don't do it through the derivatives markets, don't do it through SLV because you can't actually get the silver.
Exactly.
What happened after that is people went and bought the physical. Next time they're gonna drain the physical.
Exactly.
And then those derivative markets and those derivative crappy ETFs like GLD and SLV are going to finally be shown for what they are.
Yes.
They're going to collapse and people are going to flight to the physical. And you're going to see the managed money come in and they're going to go after the physical, and you're going to have massive supply shortages due to investment demand.
Well, I'm glad you brought that up, and we could go on forever. Actually, I get super pumped, but but it's great because even the people are saying, "Look, I'm only in the paper markets. What do I do?" And people are saying, "Go into PSLV. If that's what you got to do, go into the Sprott Physical Silver Trust." And Rick Rule is saying you wouldn't believe the amount of metal moving into our trust because we have something that's measurable.
Yes.
So I love that you use the term waves because what's happening, and on my channel we have 16-year-olds working at McDonald's buying silver.
Yeah, that's awesome.
It's incredible. I'm super pumped about Generation Z. They're waking up, and that second wave is going to happen, I think, a little closer this time.
Yeah.
And I think people are going to go, I know what to do.
It's different from 2009, 2011.
Yeah.
Many more people from different areas of society, demographically, age-wise, are now into the silver and gold game. They understand it now. Yeah. So I think whatever happens next is going to be more explosive.
Yeah, totally. See what happens when two guys that do interviews interview each other? It's not like an interview. We just start talking. It's
awesome. Fun. It's all fun. It's all good.
All right, guys, we're going to close on this. I don't know which camera to look at, but this one's going to have my best side. I'm going with this one.
Okay.
Guys, on behalf of the Economic Ninja and Rob Kientz, thank you for joining us. And the Economic Ninja is out.